Okay. All right, I think it's time. Well, hello, everyone. Thank you so much for joining us for this panel discussion. We are here today to talk about the future of robotics and AI investments. And this is where capital meets innovation. And innovation really can't go anywhere commercially without capital at its side. Capital and customers, these are the things that make capitalism, if you will. Sorry, that was a bad joke. Okay, so I'm Jen Apicella, the Executive Director of the Pittsburgh Robotics Network. I'll be moderating today's panel discussion, and I am joined here by some fantastic experts when it comes to capital. So I'm going to go ahead and turn to each one of these individuals. And the first question that I'm going to have for them today is to introduce themselves and tell us a little bit about who you are, the fund that you manage, and what you invest in. And so why don't we go ahead and just start right here to my left. Let's start with you, Mark.
All right, good afternoon, everybody. Apologies for the voice, but I think we'll be able to get through. My name is Mark Martin. I'm co-founder and general partner of Cybernetix Ventures. We're a Boston-based VC firm. We launched our fund back in 2019, my partner and I, because we saw how difficult it was for early-stage robotics companies to get funding. So my partner, Fady Saad, and I came together and said, who better than us to launch a fund to close that gap? So that's what we did, and we focus on robotics and AI exclusively, physical AI. We invest, Fund 1 was 4 verticals: manufacturing, logistics, healthcare, and construction. We're well on our way to raise Fund 2, and we're adding agriculture and energy and climate. And about 2/3 of the fund is focused on full stack hardware and software. The other third focused on enabling technologies, which of course would include AI and machine learning.
Hi, everyone. My name's Lisa Chai, general partner and co-founder of Interwoven Ventures. I come from a background of investing both public equities and private equities for various asset managers. And then I joined a company called RoboGlobal, where the venture fund spun out of, world's first investment strategy focused around robotics. The company was founded in 2013, and we spun out a few years ago. Very much like Mark, we focus on early stage companies. We invest through seed to Series B is our sweet spots across field of robotics and AI across multiple industries, including manufacturing, logistics. Supply chain is a very big area for us, as well as transportation and healthcare technology. And we are now actively investing out of our fund 2.
Hey everyone, I'm Sohail K. I came from a long career in financial technologies where I was a long time founder of multiple startups, working on early stage companies in electronic trading, the hedge fund space, operating businesses in that area. My partner also comes from financial services, being an operator of some of the largest hedge funds in the world. And about 3 years ago, when ChatGPT made its grand unveiling, it's not a very provocative statement to say that we realized it would change the world, right? It's not so insightful. Anyone who's paying attention understands that. And so immediately we started digging into, well, what could we do and how do we get involved in the world of artificial intelligence? And we just went on a journey to learn. And a year later, that led to us starting this firm, Lightscape Partners, where we are investing broadly in everything around AI, deep tech, machine learning, and infrastructure. And we've, along that journey, we did a deep dive into robotics, and we're just amazed at all the things that we've seen. And so in the last 2 years, we've made 29 investments. So far, 4 of them are in robotics. And we're here to learn. We're here to meet some great young people who are innovating and solving old world problems and also creating new innovations that are going to create entirely new verticals that didn't exist before. So very excited to be here, and thank you, Jen, and the whole group for inviting us.
Fantastic. So thank you so much for joining us. We're really excited to have you in Pittsburgh and can't wait to see all the amazing investments you're going to make in these companies. So let's talk about something here. I think to get the conversation started, there's a new term that we're seeing emerge when it comes to robotics. It's physical AI. All right, we've heard embodied AI, physical AI. So for those of you who are unaware, physical AI is kind of the new word to refer to things in robotics. And so just so we're on the same page, it's getting a lot of attention. How do each of you define it, and why is this inflection point different than previous waves of robotics?
Sure, and it is a very, very common question. I've heard it from many different directions. So our definition would be, since we launched the fund, we have a very simple definition of robotics. Robotics equals basic automation plus intelligence, AI and machine learning. And this is the way we viewed it long before ChatGPT came along. And everybody who's in robotics kind of understood that, of course, there's AI and machine learning. That's a fundamental part of robotics. What's changed is generative AI, ChatGPT, and now the application of those capabilities in robotics. And so, like all kinds of software stacks in other industries, there's an evolution, the complexity is going up. So for us, the definition of physical AI is the full intelligent software stack that drives robots' interaction with the real world. Perception, actuation, path planning, all of these. Plus, what's really new is that intelligence layer. And this is true not only for humanoids. Humanoids get a ton of attention, but this is also true in built-for-purpose robots as well. AI is now enabling a new intelligence layer on top of the traditional AI. So for us, we define it as that intelligent full-stack software. And it's worth pointing out that for those who are just doing ChatGPT at home, and you ask them, what is physical AI? Many of them will probably say, well, physical AI equals robotics. I think for those of us in the industry, I think it's important to make the distinction that physical AI is the software stack that drives robots, but robots include all the mechanisms, all of the physical actuation capabilities. So
the hardware.
The hardware, yes, thank you, Jen. So that's the definition that we believe. I don't know if you guys are good with that.
No, I agree. I think it's, you got the basic points that we agree with and I agree with. Just adding that intelligence layer creates more autonomous solutions. And we've always been very early on when we launched the fund to really invest in companies that are enablers and developers of these autonomous solutions. So across the value chain of robotics. But you are seeing a major shift happening where most of the companies are calling us now with their investment, the companies that they're building and looking for investment checks are companies that are more in the physical AI space.
I think I would just add, our framework on thinking about it, first of all, we do agree, so thank you, is, robotics has been around for a long time. It's nothing new, right? But up until now, it was always very static. You could teach a robot to do a particular task, and it would do that task over and over again, but it couldn't do anything in unstructured environments. And so today you have the advent of foundation models, vision models, and this sort of technology, which for lack of a better example, has given these robots eyes, ears, and brains, where they can now do things that were quite impossible and really only things that you'd imagine just a short 5, 10, 15 years ago. And so that's why we're really excited to come and find some of these innovators in exactly those spaces, because that will ripple into so many positive implications, we believe, for the economy and for this country, which we can talk about later in the panel.
Fantastic. So we have consensus. That's great. When it comes to robotics, that's not always the case, so that's good to hear. Now, we've talked a little bit about sort of where technology's at, and technology sort of advanced with this sort of wave of AI and the development, that this is an indicator for strong investment, good outcomes to invest in this technology. But, and not every VC fund invests in these kinds of technology, right? This is specialized sort of in a lot of ways. But let's shift a little bit now to the market signals. And so while the technology is advanced, what kind of market signals convinced each of you that now really is the time for this increased attention and increased investment in autonomy, robotics, and sort of this embodied intelligence?
Yeah, so when we launched our fund, we were pretty much already all in. And I used to like to say that to people, friends, I feel like we got a good idea, and I feel like we got pretty good timing. And now I've updated that statement to say, I think we have a really good idea, and I think we have really, really good timing. And the whole generative AI trend, it's coming, it's accelerating everything. What Sohail was talking about, what robots can accomplish, and again, humanoids built for purpose, it's just an accelerating in a dramatic way. And it's going to make these robots so much more useful, so much more usable, so much more able to handle corner cases. So it's, and across different markets, it's unlocking them at different paces. So.
I think the market signal is definitely here. You could see it with the acceleration of the compute power, the processing power. We have the technologies, we have the low-cost solutions. And also now Gen AI has really advanced all of the robotic system capabilities. So you're starting to see everyone really caring about it. Now you could actually visualize every single vertical being touched by physical AI. And on top of that, you have corporate strategics really stepped up investment in a very big way. Traditional VCs are also coming in, they care about it. So it used to be just people with domain expertise, and now everybody's stepping in. I actually like that, and I welcome it. I think the entire industry needs other VCs that were focused around software world and enterprise tech to really come in and care, because this could potentially be a much larger market overall.
Well, I would say if you want a market signal, just look around, right? I mean, this tells you everything you need to know. I mean, there's so much excitement and real effort and investment now coming into the space. And I have not been long-term in robotics, so I can't tell you it hadn't been like that before, but it certainly seems like there is something different now. And just, walking up and down the aisles, talking to some of the founders who are on the ground floor, that's how you're going to learn. That's how you see the market signals. And for us, we had met a year ago a very interesting company, just over a year ago, called Standard Bots, who happens to be here today. They were quite compelling, and we learned quite a bit about vision models and how a vertical stack, the importance of being able to build everything also in America. And so that really got our attention. And from there, we started attending conferences like this. And as I said, go to the ground floor, meet with the folks who are literally in the battlefield, pitching companies where for the first time, maybe the best time ever, you have an openness from large enterprises, large businesses, to start experimenting using these things. So I think that's fantastic. And one thing I'll add that was really interesting is I met a company today, started in 1980 in robotics. They said this past 12 months has been their best year by far. And I think that tells you everything about where things are moving today.
Yeah, that's great. That's great to hear, especially from the investment side. Because I think Pittsburgh, right, we've done technology really well for decades, so we're used to seeing the technology ripe, and then a surprise would happen where a company would say, well, why is no one buying it, right? Why is it so hard to grow my company or raise capital? And we're seeing a shift now in the world overall, globally. So it's not just a local phenomenon, and that's great that the tech is now aligning with the markets. So, okay, so building on that, Lisa, I'm going to ask you, what specific industry verticals do you think are showing the strongest commercial pull? I mean, we've got, logistics, energy, manufacturing, healthcare. I mean, lots of industries are adopting these technologies, but where are you noticing your focus, where the rubber meets the road here?
When we talk to our portfolio companies across various sectors and sizes, we're really seeing a big commercial pull coming from the CPG and food automation sector. Food manufacturing, I think it's really been driven by the critical shortage of labor. At the same time, there's a really rising demand for a certain type of food, which is the ready-to-eat meals. These are really aligned with all the trends that we're seeing with with families actually looking for quicker but healthier meals that they could cook and just heat up. So a lot of our companies in that sector are really seeing shorter sales cycles and bigger contracts and faster deployments. And then the second area, we're really starting to see an area that was extremely strong about 5 years ago, took a big dip, and it was a challenging market for the last few years, is logistics. I think post-COVID, there was a lot of digestive period for some of these warehouse automation solutions, and it was a really challenging time for many of the companies. The ones that survived that and are able to raise funding, you're starting to really see a pickup. Companies, 3PLs like UPS and FedEx are actually stepping in again, and deployments are getting bigger. You're starting to see installations happening. A lot of new innovative companies coming out. Companies like StandardBots and others, you're starting to see a lot of Gen AI incorporated, and maybe that's the technology that's driving it. But we're really bullish on logistics right now.
That's great. Mark, now you guys have been in the game of robotics for some time. What are some key industry verticals you're seeing strong commercial pull in?
Yeah, so 100% agree with Lisa on logistics. We definitely see a surge there. Manufacturing, I'd say, has been steady as she goes. Would love to see it go faster, as many in the room might want to see, and I think it will. The one that's surprised us to the upside so far is in the healthcare life sciences space. We've made several investments there, lab automation in particular. There's just a lot of needs there. So we're very excited and very bullish on that space. So that's one of the ones that when we originally put it as a focus, we saw that as, okay, we'll see how it goes, but very pleased with how that's going so far.
That's great. Now, conversely, Sohail, I'd be curious to see from your perspective what you feel are the emerging industries. So we've talked about some of the ones that have a strong center of gravity commercially, on trend, but do you see some ones that are maybe underinvested in or on the rise, or what are you seeing in your space?
Sure. So we've seen all of the things that they've mentioned and completely agree. It's exciting to see that progress. A couple of areas which are interesting that we're seeing now burgeoning today is things like sewing, where you have now finally some dexterity and sensitivity and the ability for these robots to touch and feel and sort of understand pressure, how much pressure they need to apply to these things. And then another one that's quite interesting is material science. And if it's funny, we were looking ourselves at a material science company where they're now utilizing, these tools, and they've built what they call autonomous labs, where robotic arms can now perform these functions, repetitive functions that are actually not just tedious but very dangerous, that humans in labs can't do quite often. So we think that, and by the way, this material science company we're looking at happened to be using a StandardBots arm, so that was very nice. But I think it's really fascinating because it becomes a bit of a flywheel, because I think these robotic arms are going to start helping invent new materials, which in turn are going to be then applied to the robotics, where you have lighter, stronger, more flexible materials that are going to be able to, again, perpetuate this to even new heights.
That's great. And so, again, Mark, I know you spend a lot of time in this space. Are you seeing some emerging market trends? What are some emerging industry areas?
Yeah, so one of the areas that similar to healthcare, we bet on early was construction. And we're still super bullish on it, but we've actually seen that adoption slower than we would have liked. I mean, it's multiple trillion-dollar industry, very, very little innovation. At the highest level, you'd say, of course they're going to adopt robotics, but somehow there's still a lot of inertia today. I do think, I like to describe it as, in construction, it's still the adoption, you're still kind of looking up the hill at how to break through, but I fully predict in 3 to 5 years from now, once you get on the other side of that, we're going to be looking back and say, of course that's how you do that job. Why would you not use a robot? It's drop dead obvious that's the best way to do it. We just kind of got to get through that adoption curve. So that's one I would say still looking for more progress. The good news from an investor standpoint, each of the companies we've invested in that space, one of the other upsides is oil and gas, process automation, some of the heavy industries. Those same solutions are fantastic in that space, and those industries are adopting it very, very quickly. So a lot of good news there. The last one I'll highlight is agriculture. When we launched Fund 1, we looked really hard at agriculture and just had the sense, you know what, I'm just not sure. I think the tech is getting close to ready. I'm just not sure the market's ready. And we've now added it to our Fund 2 focus. So I think we're optimistic about the technology and the market adoption that may come in ag, and some of Lisa's comment about food, we kind of connect into that as well.
Okay. So industry trends are important because that's what drives the technology demand and drives the buying power behind it. But I would be remiss if I did not bring up the big trend that we're seeing on the investment side when it comes to something a little controversial, humanoids. So, and I think you each have something to say on this, so I'll let you chime in here. But how are each of you evaluating humanoid startups? What's investable? What's hype? How are you thinking about it? We could probably spend an entire panel discussion talking about it, but if you could just give a brief comment about what you think about humanoids, how you're approaching that from an investment standpoint. Lisa, do you want to start?
Yes. We actually didn't really talk about this, so I don't know. I might be a little bit, controversial here, but we work with a lot of robotic scientists in our team, and they're going to kill me if they find out I'm saying this, because they are basically saying do not even touch the space because it's not ready for prime time. And I did initially feel that the same thing, because when you really look at the advancement, it's amazing, phenomenal. But the path to commercialization just isn't there. But recently, I have sort of kind of leaned toward humanoids. I'm looking at some of these companies and just really looking at when I met them, let's say 9 months ago to 6 months ago to 3 months ago, the advancement is really impressive. And I could see that some of the use cases also make sense in manufacturing, logistics. We don't invest in consumer facing, so we are looking at more humanoids that's doing very manual tasks, things that people really don't want to do, dangerous, really heavy industry type of equipment. So those are areas that we will probably be more interested involved. We're also working with a lot of companies that are making joint parts, whether they're contract manufacturers or component providers, and that's another way to get exposure to humanoids as well.
Great. So what do you see?
So I would say, without taking a controversial stance either way, it's an interesting discussion because humanoids seem obvious only because they look and potentially move like humans, but they have a long way to go before they can actually move like humans. And I think there's also an open question, is that in fact the best form factor that robots should be taking? And the answer probably lies in, well, what is the task, what is the job that you want these humanoids or these robots to do? And in some cases, it may be that you need 2 legs to move around and get to places. In other cases, you may just need robotic arms or other instruments that sit on a mobile contraption. Now, that said, we have not invested in a humanoid yet. I think to Lisa's point, there's a lot of very interesting, we'll call it the tools and the picks and shovels that sort of make up various components. And from an investment standpoint, those are likely more interesting for us, but I will say it's enjoyable to watch the demos and go see these things in real life. And one thing you notice is if you watch it on YouTube, it looks so incredible. You don't understand how many takes that they usually have to get to that thing. So it is really nice to follow the progress and to see where it's going. But from an investment standpoint, I think we're more interested in the tools and what's behind them.
What about you, Mark? What do you think?
So we've looked at this very carefully. We continue to look at carefully. I will just say we have not made an investment in humanoids. So I think to some extent that says it all. But my overall view is that I do think they will. It's very similar to autonomous vehicles, really, really similar, in that it's going to take a lot longer than anybody thinks. There's safety and regulatory challenges and it's just going to be a long tail of needing to optimize and solve those problems. We've looked very carefully at the use cases. It's going to be applied in a lot less use cases than people think, but there are clear use cases in both industrial applications where I do think it makes sense. It's just not going to be as big of windfall, and we're going to continue to look. So I think, one of the things I expect is as the industry goes along, there's going to be maturing available technology that I'm optimistic won't require the mega funding rounds that humanoids are taking. And the other thing none of us said this, but we might as well put it on the table. The valuations on humanoids is insane. And so unless you want, write a very risky, very large check, and large corporates can do that. It's a tough one today, but I don't rule out doing it in the future, and we like the picks and shovel approach as well.
Okay, so there's going to be some time before we're going to have them in our homes and in our businesses, I think, is the general consensus.
Well, you might have one in your home first, Jen, because I know you're a leading edge player here. But you might be alone, or maybe 5 friends or something.
Might be a prototype. Might be a prototype buddy
and
in
Jen,
my house. Yeah.
One thing also is the growth in U.S. venture funding for humanoids is now at $3 billion this year, and that has doubled from last year. And I'm not even including the robotic foundational model companies into that number. So it is not just getting interest from the media, but it's also from the investor standpoint as well. And it's something that we all have to sort of discuss with our investment committee. Does this fit in? And we do think that there will be some capabilities that will be meaningful in the industry that we're going to learn from. So it's a very exciting time. I would say that half of our investors, LPs, first question every time I meet with them is, what do you think of humanoids? So it's really bringing that discussions together and getting attention to the robotic industry. So I think right now it seems pretty positive.
I agree that, as much as we talk about some of the exaggerations, it is really propelling the industry forward. The excitement on the investor side, the push on technology. The physical AI that we were talking about, the intelligence layer, foundation models for robotics. Humanoids is driving that, and that's going to spill over into all kinds of other things. So it is overall an extremely positive thing.
Yeah. Well, let's shift here and talk about non-humanoid robotics companies a little bit. And so from an investor standpoint, when you're evaluating a startup, right, a physical AI startup, a robotics startup, what are, and Sohail, I'm gonna ask you, what would you say are some of the major milestones or indicators you look for in a startup in this kind of space to say they're investor ready, that would compel you, right, to want to invest in them?
Well, this is easy, right? So the very simple question is, what problem are you solving? What solution are you providing? And why is it that you can do this uniquely and no one else can? And from an investor standpoint, and this is just not about robotics, this is generally when you invest, you want to find companies that are able to provide a real use case. I think that, as I said earlier, we're at a time now where a lot of these larger corporations are very excited and interested in AI and innovation and the next thing. So you're at a time where everyone will take the call. They're going to listen to what you have to say. And as we all know, you only get one chance to make a first impression. So our view is, if you're going to go out and start selling your product, make sure you're ready and make sure you're really solving a problem that is going to make an impression that you're going to be wanted.
Yeah. Now, that's when you're looking at a company, is it also in terms of their commercial traction or safety, reliability, or some of these other mechanisms? What are some other company key indicators that you're looking for, that you're sort of saying, yes, maybe they check the boxes, right? Yes, you're solving a problem, but is the business plan going to work? Is the company going to make money? How do you determine that?
Well, that's right. I mean, again, once you're in the door, how is it going to be safe? Is it going to be reliable? Is it going to check all the compliance boxes? Anytime you go into a new industry or you're providing a new tool, this is something, remember, the company on the other side is also experimenting with you. And so it's very important that you're buttoned up on the operations side and you can deliver. It's one thing to get someone really excited about a potential vision and a sale that you're going to go make to them, but once you're once you're purchased and once you're there, how do you service that company? And we think that, again, reputationally, it's such an important thing. So as we invest, we're looking for companies and entrepreneurs that we believe are going to be able to not just make that sale, but really follow through and check all of those requisite boxes around safety and compliance and follow through. And then scalability. You know, one of the issues that we see is, you have a great product, can you actually meet the demand? Can you actually get the right supply chains, and can you get the right tools that you need to continue to scale and build your business?
Lisa, what do you look for in terms of milestones that this is a business, the startup is a business that is investable for you?
Yes. And it really varies based on the verticals that they're in. Sometimes the safety is just not an issue. If you have an autonomous solution, there's nobody in the warehouse, it's only working at nights, for example. But the actual milestones, if you look beyond the technology where they've passed the technology test, we love the team. Now what do we look for is I actually look through their pilots and their POCs and pilot contracts. We go through the quality of that because sometimes they have all these logos, dozens of customers, but then it's a very small pilot. It's like a one system, and you know that there's no renewal aspect to it. Where's the maintenance? You could just kind of see that someone did a favor of signing the contract. So the quality is pretty low. So we try to wait on, maybe work with them and collaborate with them and saying what really happened here, who are you trying to get? And there's a fine line between getting the right pilot too, the pricing, because sometimes the pricing's all over the place right now. And I think I feel the pain of the founders of robotic companies where they're really having a hard time trying to get the customers, and they don't know the pricing because you don't have consultants that have experience doing this. So they're just kind of throwing something out there, but what's happened is that customers are now really sophisticated. They know what they're looking for. They know what the budget that they have. They know where they could sign off, what they're trying to do. They know they have a couple of maybe installation sites and a couple of factory floors that they'll ever install, and there's no other upside. So you have to work with your board members, investors, to see which quality customers that you could really find. And when we see some of the good pilots there, and you see the renewals and low churn, we're really excited about those kind of milestones.
Yeah, that's great. Now, you both brought up something that I think is important, right? The company has to make sense. The business has to make sense. It has to be problem focused. It has to understand what it's trying to do or accomplish. But it's the people running these companies that are making these decisions. And so the founders, right, and the founding team, you have to have confidence in them. And so, Mark, I'm curious, when it comes to the founders themselves, what kind of qualities or traits give you kind of a signal that they're going to have the ability to sell, they're going to have the ability to grow their company, to scale the business, and not just build fantastic technology? Because they all are great technologists, these company founders, but what are those signals or qualities you look for?
Yeah, this is a super important topic. So we look for a founding team that has both a technology leadership, technical expert, and we look for somebody who's got business experience, maybe sales, maybe business development, and we want one of the either CEO, CTO, COO, however the structure is, somebody's got to come from the market. The history of robotics failures is, in most cases, somebody who's got a great idea and they're hunting for a market application. And so we set as a foundational criteria, we're looking for a founding team, somebody has come from that market. Somebody is, if it's construction, we've invested in a company that, the CEO, he was 6 years on the construction site. He puts on a safety vest and a helmet and a hard hat. He looks and sounds just like he's right off a construction site. We actually love that because he feels in his gut the pain points that his customer feels. So that's one. I would also say, one of the key attributes for founding teams is resilience. Because it's never going to go the way you think it's going to go. And so we try to get behind just the attributes of this founding team and really understand Do they have what it takes to stick it out through good times and bad? Do they have the open-mindedness to listen, take advice, to pivot if they have to? They're not just going to, tunnel right to the ground on a strategy that's clearly not working. So we look for that kind of adaptability, flexibility, listening, and resilience is a really big one.
Yeah, I think these are all really good points. It's very rare, though, to find, I think, a startup in robotics and physical AI that has that balanced team, right? That's like, how often are you finding that be the case? Because mostly it's tech heavy, because it's a heavy lift technologically, and you don't always have the luxury of having market expertise on the team.
I think it's more and more common today. One of the things that I think is becoming a game changer in robotics is really high quality founding teams that meet the criteria that I was just describing. Perfect example is, I spent 2 hours with 7 or 8 startups here, and I did the same thing a few years back. I was blown away by the quality of the founding teams that I spoke to today. And they, by and large, they represent that mix that I just described. One of them had the guy was a super talented salesperson with an enterprise sales background. I love that. So I think this is one of the things that's changing dramatically in robotics is you have high quality leadership, startup, entrepreneurial people who are moving into this space. And so I think that's one of the things that's going to really drive the success in the industry.
Okay, so now I have to ask this question because startup founders ask me this all the time when they're preparing their pitch deck, right? Because when they get meetings with investors, it's typical as a startup, you pitch to the investor, please invest in me, this is why. And so I'll start with you, Lisa. What makes a robotics or a physical AI company really stand out when they're doing a pitch? Because they've got a limited amount of time and they want to tell you everything in the world about their technology, but what are you looking for in a pitch that compels you?
I find sometimes the founders spend way too much time talking about the problem. And I think it's because I'm in the industry. We've been investing for over a decade in this industry, so I kind of know what the problems are. And I think for us, because you have to do some homework on the investor who you're talking to, so if you have someone who's got some domain expertise, maybe less on the problem and talking about how you're going to execute that. We see so many great companies, great ideas, but I'm not really sure if they've articulated how they're going to execute. And maybe having the right sort of co-founders, people that they have hired, advisors, board members, whoever that's going to help you execute. That's really, I'm thinking the whole time as to how you're going to achieve those milestones and what are you going to achieve. So to me, if you have a couple of minutes, talk about execution and where you see the industry going and how are you playing that role. So that's going to be very important.
Sohail, what about you? What do you look for in a pitch?
Well, the technical talent is in abundance, right? So finding companies that have this incredible technical high aptitude in solving a technical problem is great, but I'll piggyback a little bit. It's really deep domain expertise, one, and two is go to market. Do they have the ability to go out to the market and to sell, et cetera? And then I'll tie in a little bit to what Lisa said earlier, which is, have they done price discovery and can they actually get into agreements and contracts that make sense for them, where they can scale and create that sort of stickiness factor, which is very important because we're at a time now where the technological moat is probably the smallest it's ever been in any industry, whether it's robotics or anywhere in deep tech and so on. So it's so important that once you have the product, you can really sell that product and you can structure your agreements in such a way where these customers are going to continuously rely on you and want your version 2 and version 3 and version 4. So, getting in the door, I think again, it's an all-time high right now. The question is, can you go to market, can you sell? So, I wouldn't underestimate that having that deep domain expertise and having that expert from whatever that field is that this particular company is trying to solve.
That's great. Thank you for that. I think that's really helpful for others to hear. Now, I would be remiss, I know we're getting to the end of our discussion here, but in our current climate today, our current political climate today, I mean, we're in the middle of a government shutdown. I think the state of Pennsylvania budget's also not been, deciphered. So politics, geopolitical landscapes, these kinds of things affect these businesses. And so, Mark, in terms of supply chain shifts, manufacturing reshoring, the tariffs and stuff, what influence does this have on the way that you approach investment? How does this influence investment for you?
So in general, I would say we pay attention to it. We definitely, when the tariff thing took off, we had conversations with all of our portfolio companies that were worried about supply chain effects and for just one example. So we pay attention to it, but we don't dramatically swing the investment thesis. Let's go hard left, let's go hard right. I would say in general, it may influence the weighting. I mean, we're ultimately portfolio managers. So, if there's a lot of red flags in a particular sector, we say, you know what, maybe we might want to slow down a little in this space, wait and see, et cetera. So we're in this for the long haul. I think the long-term trends are extremely compelling, as we were discussing earlier. So frankly, we try not to be distracted to some of the short-term noise.
Yeah, I think that's wise. So as we're wrapping things up here at the end, I'd like to just ask a final question for each of you. You're all very experienced. I think you're very wise in terms of markets and talking to founders and startups and all of these things. And so your advisory is very helpful and critical as these companies grow. What is one piece of advice that you would like to give to a robotics founder who is looking to grow their startup and raise funds, over the next 12-month cycle here? What words of wisdom or advisory do you each have for them? And Sohail, maybe we could start with you.
Sure, I'll keep this one really simple and easy to remember. Build a product that your client will use, not a product that an engineer will marvel at. Right? And so to state the obvious, there's so many shiny objects that seem really wonderful, and they are wonderful in their own ways, but not really useful. So make sure when you build a product, and as I said earlier, you get one chance for a first impression, make sure it's a product that you're solving a problem that client is going to use and start to utilize and get you in the market.
I have two advice. One is really look for what you're really looking for in your investor. If you just want capital, there's nothing wrong with that. And if you want that, then get as much as capital as you can from the investor that you're looking for. But if you feel like you're the kind of founder that's looking for an investor that needs more than the capital, you want some advice, some strategic guidance, maybe connections with some customers, then you have to go find that investor and make that extra effort to get to know them. The chemistry is really important. If I meet with so many great companies, but I don't have chemistry with a founder, and I hate to do it, but I can't invest because I know that I'm not going to be there for you when things are bad. So that's really important that you really spend time getting the right investor. The second advice, this is really, really important for robotic industries, that you got to get your equipment financing partners lined up really early. A lot of times, by the time they call me and say, hey, could you help us make some introduction to equipment financiers or debt financing, it's too late. You've already raised the money, you've already taken the wiring, and you've already spent half of it, So these equipment financing has to be done sometimes in parallel or even before. So it's super important.
All right. I'm really glad you guys covered those because I agree with all of them. Since she did two, I'm going to do two. First of all, if you're a founder and you're thinking about starting a company, really pick your co-founder wisely. And one of the guiding principles, and actually it's the way my partner and I work, our superpowers are highly complementary. And I think that's what you want in a founding team. You really don't want overlapping capabilities. So if you haven't started yet, target co-founders with complementary superpowers. The second thing is interview the customers. Don't rely on internet marketing to come up with your strategy. You might start that way, but get out and talk to customers. I had one guy say this morning that, and I loved it, he said, we are all over our customers, management, on the floor, talking to people. We know the problems they have better than they know themselves. And I think that is going to serve you extremely well, both with investors and with your ultimate strategy down the road.
Words of wisdom. Wonderful. Thank you so much. Okay, well, that's going to wrap up our discussion. We could talk for hours. This is a fascinating topic, but I want to let's thank our panelists for coming to Pittsburgh, for joining us here today for this spectacular event and for this fantastic discussion. I know that they've been talking to companies. I can't wait to hear the outcomes of some of those things. So hopefully some exciting announcements on the horizon. And thank you all for joining us. And then I think the next panel begins at 3 o'clock. So thank you so much.